I'm Tim Sustak, Chief Treasury Officer with Vizo Financial, and this is your FOMC update for the September 2025 meeting. At its latest meeting, the FOMC chose to lower the target Fed funds range 25 basis points to a level of 4 to 4.25%. And they also lowered the rate and reserve balances to a level of 4.15%. The decision was widely expected by the markets. There was one dissent from newly appointed Fed Governor Stephen Miron, who favored a 50 basis point reduction at this meeting. The post-meeting statement had some changes. In addition to the rate reduction, the most important change was that the Fed now judges that downside risks to employment have risen, and given that shift in the balance of risks, the committee decided to lower rates. As it's the end of a quarter, we had another look at the Fed's summary of economic projections. The big news here is usually the dot plot, and this time it was of particular interest as the future of rates after this meeting was very much in debate. The dot plot shows a median projection for the Fed funds rate at the end of 2025 to be 125 basis point cut lower than the projection in June. That means the Fed now sees 2 more 25 basis point cuts before the end of the year, which would put the funds range at 3.5 to 3.75%. There is still division among the ranks though, as the largest groups of dots either show 2 more 25 basis point reductions, encompassing 9 voters, or no further reductions, encompassing 6 voters. We'll see if Chair Powell gave us any additional information about the future of rates at his press conference after the break. Welcome back. Chair Powell gave his prepared remarks to start the press conference. He said that recent economic indicators show growth has moderated, payroll gains have slowed significantly, and inflation remains somewhat elevated. He said the committee's dual mandate goals are in tension, meaning risks to inflation are to the upside and risks to employment are to the downside. However, due to the downside risk to employment increasing as of late, the committee judged it was appropriate to take another step closer to a neutral monetary policy. In the question and answer session, there were a variety of questions for Chair Powell, with a number of them asking for explanations around the rate move and rate outlook. He called the rate move at this meeting a risk management cut. He explained that tariff-related inflation risks have become a bit less than what the committee judged a few months ago, while the labor market has been cooling and the risks to the downside there have been increasing. Because of that, it was appropriate to move rates closer to neutral. When asked if there was consideration for a greater than 25 basis point cut, Chair Powell said that there was no significant support for that. The committee does not feel the policy is in a bad place, and a larger rate move is only considered when the Fed feels it needs to catch up. He indicated that though they are moving towards neutral, that does not necessarily mean that policy should not still be somewhat restrictive. Chair Powell said the rate path is a meeting-by-meeting situation that will be decided based on the data and the balance of risks. Well, the Fed delivered the rate cut the market wanted, and the dot plot now aligns with market expectations. Based on the press conference though, it seems the future of rates is still very much up in the air, even for the remainder of this year. That's the FOMC update for September. Thanks for watching, and be well.